Up next, I have another returning project. They spoke at Dcentral Miami before and joined us previously on other events as well too. I'll bring Maarten here up on the stage. We have Pollen DAO.
Hi, good day. How are you, Justin?
Hey, doing good. Always great having you guys on as well. The floor is yours. I'm not sure if you wanted to do a screen share or a slideshow thing, but if you hit the share button, you can go ahead and share a screen, and I can add that into the stream here too.
Yeah, before I do that, I just wanted to ask you what would happen in the DeFi world if you would lose like $1.7 million.
$1,007 or
yeah, no, 1.7 million. Sorry.
Oh, 1.7
million.
Oh, what would happen? I don't. Well, in the case what we saw with what happened with all the funds in DeFi, right? Like I guess we saw the implosions, but DeFi did its job, right, in a way that the DeFi loans was the one that got paid back first.
Yeah. And what would happen if you would lose 1.7 billion of your customers' money?
Oh, that'd be terrible. Yeah.
And what would happen if you would lose 1.7 trillion?
Oh, yeah, that'd be the whole crypto market in general then.
Well, yeah, it's probably more.
Yeah, more than that.
Like what was today in the news is that one company lost that type of money and they didn't get hacked. And that's why I think DeFi is so important. And that's what I wanted to talk about. Because I think if we're talking about 1.7 trillion being lost in 6 months and no hack happened, something is wrong. Mm-hmm. What do you think?
Definitely. And the fact that the people that provided those loans or participated in it can't get their money out. It's at the mercy and control of those companies. It's even literally written in their terms of service that the moment you hand over your keys over to them, you don't own your assets at all. They get to decide on how they can liquidate or pay back the top whales and creditors in this case, and not you, the everyday person. So, despite what happened with Luna and everything, everybody was saying, oh, DeFi is bad. All this, everything that's, happened is terrible, massive implosion. You look at the opposite side. These are very big centralized CeFi entities. Even some big exchanges. You thought an exchange like Voyager would never happen that way. It's like a Coinbase like going down, but in Canada and others as well. And you just wouldn't think that they would have provided that much liquidity, loans, or became they were participating in DeFi, like straight up. If you think about it, right? Like that's what happened.
Well, let me share my screen and show you what was in the news, so you can see it. So basically in Bloomberg today, it said BlackRock basically lost 1.7 trillion of its customers' money.
I did not see this one. Okay.
Yeah. So this is what's wrong with the financial system today, because like only a couple of outlets really thought this was as important. They weren't writing that few things about like the crypto market, because if in crypto some money gets lost, it gets front page news. But like 1.7 trillion, that's kind of like the type of money we can't imagine. But I'm not surprised. I actually predicted that this would happen, because it's a fundamental flaw of like how the system is built. But to understand that, I have to go back a little bit to 2008. Are you familiar with Warren Buffett?
Yeah.
And with hedge funds?
Yep.
Yeah, so Warren Buffett saw these hedge funds that like were charging, I don't know if you know the 22 rule.
I don't know. You said the 22 rule?
Yeah, so basically a hedge fund traditionally or the 220 rule, charges you 2% of your assets. So if you give them your money every year, they will charge you 2% just to manage your money, even if like they lose it. And then they'll charge you 20% of the profits that they make for you. So that is called active investment. And it's kind of expensive unless you tell me otherwise.
Yeah. I mean, they're literally making off a yield off of you straight up.
Yeah, exactly. So Warren Buffett wasn't happy with that, and he said, like, look, I'm going to take a bet against any hedge fund that wants to like compete with me, and I'm going to just follow the market by buying something very cheap called an index fund, and I think I can beat any hedge fund as long as we take 10 years to do the bet. And he won it. And what happened is it transformed the industry in traditional finance, because all of a sudden everybody said, why do I give all my money to these hedge funds if they don't beat the market over 10 years time? It's better that I just follow the S&P 500, the NASDAQ or whatever. And that's exactly what happened to BlackRock. BlackRock is the biggest company in index funds, and its customer just give it money that follows the market. But what has happened to the market lately? It crashed. So if you have instruments that just follow the market, and the market went up for the last 10 years, but for the next 3 years, it might not do the same, then you lose people's trillions. And that's exactly what's happening. But unlike traditional finance, I think we have a solution for this. So one of the customers I work for is called Pollen DeFi, and they work on DeFi 2.0. And what they're looking to do is to create indexes that like beat the market, and especially if the market goes down. So basically, if you have an index and you invest in it and the market goes down, it should generate money. And that's because people can go short and say the market's going to go down, so like we need to make money now. And when the market goes up, they can make money. So the idea is, can we make a product that like makes money based on like predicting the market better than anything else, and then investing when everything goes up for it to go up, and when everything goes down, shorting the market. And to solve the problem of the hedge fund and the 220 is it needs to be ultra cheap. So that is not possible in traditional finance, because there you'd have to pay a lot of people lots of money to give you that data. But in DeFi, you can gamify it. You can make it exciting. And that's exactly what I wanted to demo here today. So if you want to predict the market, it's not very complex. You just need to be able to go in and say like, the market had a correction because it went up yesterday so much. So being in USD is good. But like, I actually think that like the market will go up again tomorrow. So if my prediction would be that like AVAX is going to go up, Bitcoin is going to go up, Curve is going to go up, Ether is going to go up, then I can make this prediction. And that's exactly what is required, just moving some sliders. Because if I now predict the market with this, I basically, and I'm just going to quickly do this, I can basically see how good I am at predicting. And unfortunately, personally, I'm not the best, because I'm at position 315 of the leaderboard. Now, I don't know where I was before, but on testnet, we had about 7,500. We're now just in Austin launched, so we're about 600 almost portfolio managers. But what we found out is that like, ask people to continuously predict the market, and a lot of people don't do it very well, but some people do it amazingly well. Like you can see here, people making 106% profit in a bear market that goes down. So by knowing exactly who is great, what you can now do is take the top. So if we would take the top portfolio managers and we would like average their portfolio, we could do amazing things. And let me show you what would happen. well, if we take $100,000 and we would like just follow the market, this is what it would have done in the last 2 months from like April and May when we had the crash. It would just have followed the market, just like we saw with what happened with BlackRock. But if we would have asked the top 50 people in virtual portfolio predictions what they would have done, this is their performance. And even if we adjusted with lots and lots of gas fees on the expensive chains, we still beat the market. And this was before we actually introduced shorting. So my thinking is that like soon we'll be able to see this go up. So collecting the wisdom of the DeFi crowd on what will happen in the market and then investing in that is a good thing to do. Now, there's only one problem. How do you pay all these like predictors? At the moment, it's very easy. You can delegate to the top your pollen. So I can say like, oh, I like this one and this one and this one. And I can now go and copy trade them so that my pollen is following them exactly the same. And if they generate those great returns, I get them as well. I get at least 80% because if they create a lot of profit for me, I'll have to give 20. And this is what's going to be really exciting for them, because if they have lots and lots of delegators, then they will make a lot of money by doing this. So that's the idea of pollen. And it's all part of this whole system whereby if you can have everybody coming up with virtual portfolio predictions around DeFi, around GameFi, Metaverse, ecotoks, whatever you want, if they can predict it, then you can create leaderboards. And we're now working on something called League. So it becomes really a sort of crypto fantasy football, because you might not be the best at predicting the overall market, but you might be very good predicting rare NFTs and be one of the top there. So that like an OpenSea or somebody like that could sponsor you, and you could like make money by predicting the market. And if you do that, what we're now working on is to take all those trading signals and having indexes automatically invest. How would that work? Well, if I have like joined a couple of indexes that have a real token with real assets, because until now Pollen Virtual was all about like predicting the market based on virtual things, not really buying assets. But here I could have like an index that if I buy the CVI token and I invest, let's say $5,000, and then the underlying $5,000 is used to buy a set of tokens, because every day it will ask, dear league of traders, what do you think will happen with the market? And based on their general understanding of what they're looking at and their trading skills, it will now invest in exactly the type of coins that like will beat the market, be it long or short. So that the only thing you have to do is just invest stable coin, and it now automatically does it for you. So until now, traditional finance was about like you give somebody money, pay them a lot to manage it for you, and only the very rich can do that. And even then, it's often not beating the market. Or you buy an index, and then if the market goes down, you're like the BlackRock customers feeling today. But with this type of setup, you just basically invest in one index token, and then it takes a collective wisdom of like the top traders in that specific group. So if you want NFTs, or if you want to invest in metaverses or whatever, we can create leagues, or you actually in the future can create leagues around all these topics, determine which tokens are important for an ecological climate league, or even you can go to the point where like you would be having two communities fight with one another. could be a Cosmos community, as I heard before, against Solana community or whatever. Everybody can create their own leagues and show that they're better, and as such drive these indexes. And for somebody that doesn't want to know which rare NFT is good or which of the hundreds of eco tokens to buy, you can just buy an index and follow the general market. So that's what we're working on today. And the more important thing is that, like, this is an example of how DeFi today can do something disruptive in indexes, but we're going to add regulated modules on top. We want DeFi to go towards like being used by the more general public, because even if you'd have the best type of indexes on pure decentralized basis, a lot of like investment groups that manage, for instance, pension funds, insurance money, and whatever, wouldn't be able to bring their customers' money. So you need things on top to have regulated indexes, and that's things like KYC, know who invests, AML, know that there's no fraudulent money coming in, and other type of things. So we're working specifically on allowing those type of things to be added so that anybody can create both a decentralized index as well as a regulated index, and then launch those in regulated markets. And this is how DeFi is trying to solve a 1.7 trillion or more problem, and how DeFi can move away from being that like odd thing that like grew up at the outskirts of finance, to actually in the future define the core of both centralized and decentralized finance. And that's why I'm really excited about like all this potential. What do you think? So, hi Justin, there you are.
Hey, sorry about that. Yeah, just hop back on with everything as well too. Sorry, missed your question.
So basically, I think in this world, there's now a potential that like the DeFi world builds solutions that will become the core of both centralized and decentralized finance. And that I think will be the future, because we will never see a world that says like, okay, let's stop all centralized things and let's go completely decentralized.
Yep.
You need to have that hybrid world. But I think it's possible, and I think that is what is going to bring billions of people to actually trust their life savings, their pensions, their insurance funds, and so on, with on the blockchains. What do you think?
Yeah, I think that there's always going to be a hybrid approach, especially with just seeing how people just like lose, like people lose their assets, they get hacked, there's so many different things why people would want to go to a custodial wallet or service out there. Obviously there's it has its own risks, but going fully decentralized and owning your own assets and controlling that has its own risks as well, if you're a mainstream person that doesn't know how to manage your keys, your wallets, etc. as well. But if we want to see it as a true bridge of getting into real DeFi, we have to find the apps that are just like Robinhood, that make it super easy and user friendly, but also integrate with the old banking and financial fintech systems too. So the way I foresee it is you actually have the old school traditional banks and fintech, but then you have like the middleman bridges, which is like the neobanks and the neo fintechs, and those guys are like the more like the hybrid. Again, they're still centralized, but they allow for new innovations and think of it as like an interoperability bridge between CeFi and DeFi as well, right? So yeah. I agree with you fully, and I think that decentralization and different flavors of it will come about, and we'll see some hybridization of that. And there's going to be a push on both sides. You're going to see one extreme DeFi and decentralized product out there, and then you'll see some that are more hybrid too. But I think, like you said, for mainstream adoption to get there, we need there will be hybrid approaches, and there needs to be a hybrid approach. Somebody that knows how to work, operate, and follow the guidelines and rules on the traditional side, and then navigate into DeFi. Because regardless, what you already see is just like with something like again like Celsius, BlockFi, and even some of the other guys, like they are running DeFi behind the scenes, not transparently, but you know they were degens too.
And I think the other part, which I didn't mention that much in my talk, is the ecosystem play. I think not only could you like make an index where you say I want a regulated custodian, or I want this like traditional AML or KYC type of solution, but I think there's also a place for like other DeFi protocols to be mixed in here. Because if you have an index that like holds let's say billions of people assets, and it's in a slow moving world, like, hey, these are like real assets, buildings that are tokenized and so on, the prices will not change every day. So the price of a building might be calculated once a month, for instance. So in that case, you have these tokens sitting there for a month. You want DeFi to come in and say, can we stake them? Can we do extra yield generation, even if it's 100% collateralized? Or, hey, if these are billions of buildings sitting there, can I ensure that like nothing happens and nobody hacks this? So even the like these hybrid systems, I think, will not be this one solution, centralized, one solution decentralized, but it's an ecosystem with a mix, and that's also one of the things that I think is fascinating to see that come to life. What do you think?
Yeah, I fully agree, and I think that we're still super early on where we are for DeFi to see that, but also too, we just never got full regulatory clarity. Obviously, with what's happening with Luna and 3AC and all this stuff, it's scaring regulators. But if anything, you know, as long as we can get real clarity from whether it be the SEC and others, other governments, like Singapore is now announcing, you know, they're going to start talking about what they want to regulate. Because of the whole 3AC fiasco. But they were quiet before that, right? And it's like, do they have to wait till something implodes before that happens? I guess so, because they realize that people's monies were at stake. Obviously, you know, from a DeFi perspective, regulation could be an impediment for that, but as long, you know, to me, it provides the rails and clarity on how to move forward, and allows more clarity within that jurisdiction on how people can build and integrate forward there from their side too.
And talking about regulation, DeFi needs regulation, but like what we're seeing today, and I don't know if it's in the US the same, but like in the last weeks, there were like a couple of articles in Europe in the press. I don't know if you're familiar with Revolut and Starling, but they're sort of like number 1 and 2 in the UK market for fintech next gen banks, and both of them find it very hard to get regulated. So Revolut is already like more than a year trying to get a UK license, and Starling just gave up getting a European license. So we're talking here about like fintechs that like have billions in investment. So even if they can't get regulated, how can like a 20 people DeFi project on a slim budget have any chances? So I think it's not about like a regulator that just says like, oh, we know what the world needs and we make it very hard. I think regulation needs to change. And I think DeFi can actually be helpful there, because you could make oracles where like everybody could check, is this wallet on a forbidden list? If it is, let's not like take their money. But instead, in traditional finance, that's not how anti-money laundering works. Anti-money laundering is a lot less transparent, a lot less real-time. So I think there's a lot of potential that like by working together with regulators, we could come up with like better ways and for keeping customers' money safe. What do you think?
Yeah, I think so, and I think that we'll have to see what happens with all this the aftermath and how these regulators will come in and what their stance is. I think at this point, like a lot of these governments are not in the ban mode at all. They're just trying to figure out then how to maximize from it or tax it in this case, which again it's fine as long as they just provide that clear guidelines, which hasn't been there, and maybe everybody's waiting for the U.S. and the U.S. is just moving at snail speed, not even approving like an ETF or anything, Bitcoin ETF, even though there's no real answer there, and I think that's where Digital Currency Group and Genesis was suing the SEC because of that. So I think that could be monumental once we get clarity on either end. If we can move forward for this, because it seems that there's some delays.
Yeah, like the US is a strange beast because they're still applying laws from 1934, the Howey test, to see if you're a security. And for once, I think Europe is doing something great there. They launched MiCA the other day, which is a specific regulation for crypto assets, and also Dubai is doing great things. You mentioned also the great work of Singapore. So I think there's a lot of things happening, and I just hope that like those regulators come with an open mindset, because actually I think a general collaboration, the transparency that blockchain brings to finance is enormous. The real-time possibility to stop bad actors from like moving their ill-gotten billions into this market could be enormously interesting if they gave DeFi a chance. For sure. Cool. Yeah, and I'm just we have one last talk that we're coming up as well too, and also want to say thank you again, Maarten, for joining us for today's discussion and contributing to DeFi Summit. I think you brought a lot of interesting ideas and questions and kind of an understanding on how we can move forward at the current state of DeFi, how we can bring traditional, more like DeFi 2.5 into the mix as well, and then applying that model into kind of like where we are currently. It depends on your perspective where we are in DeFi. Some people say we've been moving so fast like in 1 year. Like DeFi has already witnessed and experienced multiple nuke events, but each time though it's getting bigger and bigger and stronger. People are iterating and learning from it super fast. Sometimes it's super hard, the hard way to learn about it. But the cool thing though is that things are able to move much more faster and much more experimental than what's going on in traditional finance and fintech as well too. Any last thoughts to share? Yeah, no, I want everybody to be invited to come and check out Pollen.id and help us jointly disrupt index funds, because nobody likes to lose 1.7 trillion of customers' money. No, not at all, and that's way over the crypto market cap in general as well too. But it goes to show you though how small crypto is still compared to the world. It's not even one major tech stock. Apple is still worth more than all crypto in terms of valuation and everything too. So it's always good to have that perspective and see comparisons to other asset classes. But if we can move everything from those assets into digital, in this case with crypto, NFTs and others, then we're going to unlock even more dollars, liquidity, and potential there. And that's where we can see the future upside is as well. Definitely. Thank you for having me.
Hey, no problem. We'll see you again soon in another upcoming Dcentral event. Thanks again for jumping on.
Thank you. Bye.